They will print their way out of this problem to print the 37 trillion in debt in 3 years, but they will peg the treasury to gold, probably revalue it, which devalues the dollar, allows them to pay off the debt, some of it, and not issue long-term debt for a couple of years anyway, with all the money they take in from the Fed on the Treasury General Account issuance of gold certificates. Treasury only needs to tell the Federal Reserve, revalue the price of gold right now. And they do. Bang, it's done. No congressional approval. Every $4,000 increase in the price of gold would give the Treasury General Account $1 trillion free and clear. If they moved it, as Jim Rickards says, to $24,000 an ounce, as crazy as that sounds, it would benefit all the central banks. It would massively devalue the dollar. I believe they're going to destroy the dollar. I think that's what they're intending to do to save the system. Now, how do they do that? I think ultimately you see the stablecoin bill that is being used to flood the front end of the bond market with short-term debt issuance, which when Janet Yellen did it, we saw how beneficial that was for metals and for equities and for cryptocurrencies. And as Luke Groman, I think aptly puts it, they want to anesthetize the back end of the market. And here's the thing. When you look at where we're at the back end of the market, the 10-year treasury, you're going to see rates continue to move higher because just bottling up a few facts, we have $28 trillion due in 3 years in maturing treasuries. That's fact. 28 trillion by 2028. We take in 5 trillion a year in tax revenue. That's 15 trillion. You're halfway there. That doesn't take into account the 3 trillion plus per year in deficit spending. They just came out with their projection for the next quarter. They want to print $1 trillion over 3 months. So the point of it is that 3 trillion per year deficit spending minimum over the next 3 years is another 9 trillion. 28 and 9, 37. We take in 15 trillion in tax revenue. We're, hardly 25% of the way there, basically. So how do you do that? How do you finance that at a time when the rest of the world is shedding treasuries like China and Japan and Saudi Arabia? And now we're supposed to believe that the United Kingdom, one of the most indebted nations in the world, is buying the debt of the most indebted nation of the world. They're number 2, and the Cayman Islands and Ireland. The whole thing is a shell game. So what I believe that they are going to do is first and foremost, let's look at we've become a net importer of gold. And month over month, we're seeing massive inflows of gold every single month. I asked Judy Shelton, who was Trump's nominee to run the Fed in 2016, do you think that they're going to issue gold-backed treasuries? That was what her book was all about. On my interview with her, she said, there is no question, in no uncertain terms, did he say to me, July 4th, 2026, he will do that. It's a big day for him. It's the 250th year anniversary of the country, and he will issue gold-backed treasuries on the back end of the market that day. Now think about this. If you are reshoring all the gold, you let the price rise. Even Luke Groman thinks it'll get to 4, 5, 6, 7,000, and then they'll revalue it. Now, gold is held on every central bank balance sheet in what's called the gold revaluation account. You can't make it up. That's the name of it. If they did revalue it, first of all, it would benefit every central bank on the planet. The Treasury only needs to tell the Federal Reserve, revalue the price of gold right now. And they do. Bang, it's done. No congressional approval. Every $4,000 increase in the price of gold would give the Treasury General Account $1 trillion free and clear. If they moved it, as Jim Rickards says, to $24,000 an ounce, as crazy as that sounds, it would benefit all the central banks. It would massively devalue the dollar, to your point, create tons of inflation, but now that would give the Treasury General Account $6 trillion free and clear. The Treasury issues gold certificates to the Federal Reserve. The Federal Reserve takes the gold and holds it. Prints the money, the $6 trillion, which devalues the dollar tremendously, just like Roosevelt did in 33, gives the money to the Treasury. Now, the Fed doesn't own that gold. They own the dollar value of the gold. The gold belongs to the Treasury and to the American people. Now they start paying down their debt. They don't have to issue any long-term treasury. They flood the market with stablecoin issuance on all the cryptos that fund the short-term treasury debt to keep the game going. And with low interest rates, if you back the treasury, the long end, like the 50-year to start with, as Judy says, and then 30 and 20 and 10 later, shorter durations over time, you can peg a 0 interest rate to the long end of the curve. 0 interest rate, 0 coupon, redeemable in gold. That gold is the inflation barometer. The more stupidity we use in monetary policy, the higher the price of gold goes. So we say, take our long-term treasury. You can still trade it the way you always do, giving you great liquidity, but it is redeemable in the end in gold. Judy Shelton says they'll issue stable coins off of those too, giving more energy to the short front end of the curve. And now you have zero interest rates on the long end, redeemable in gold way down the road, starting at 50, 30, and then 20 and 10 over time. But now you can bring back your manufacturing in an era of a very devalued dollar and very low interest rates on the long end. Bring back your manufacturing, reshore your manufacturing, and grow your way out of this mess that we find ourselves in. It is, in my mind, the only way out. You can hyperinflate, you can default, or you can do a soft default on the dollar, which I think they're going to do. They're going to destroy it. You save in dollars, you're going to go broke, period. So they will print their way out of this problem to print the 37 trillion in debt in 3 years, but they will peg the treasury to gold, probably revalue it, which devalues the dollar, allows them to pay off the debt, some of it, and not issue long-term debt for a couple of years anyway, with all the money they take in from the Fed on the Treasury General Account issuance of gold certificates. With those low interest rates and cheap dollar, you bring back your manufacturing, you retool, and you grow your way out of this problem. And I could see Trump getting in front of the American public and saying, listen, we've squandered this wonderful opportunity. And by the way, they understand it. It's called Triffin's Dilemma. Vice President Vance has talked about this, written about it on White House letterhead, that if you are the world reserve currency, Triffin's Dilemma says you will always have a trade imbalance, a big one, because you cannot give the world enough dollars to do everything they need to do with the world reserve currency simply by trade alone. You export dollars to the rest of the world, which means they sell their currency to buy your currency. Their currency goes down, your dollar goes up, meaning manufacturing over there is half the price, let alone the labor side. So your manufacturing gets hollowed out. There is no way to be a world reserve without hollowed out manufacturing. So all the manufacturing goes over there, and that's where we are now. Coupled with the indebtedness and the fact that we've held interest rates so low for so long, so many years, that we created distortions in asset prices, there is no way to bring it back without blowing up the entire system. Either you hyperinflate or you let rates go to the moon in stocks, bonds, real estate, banks, insurance companies, poof, all at once. So how do you keep rates low in an inflationary environment and still get demand for the long end of the curve? The short end, they will create these stable coins, which is really not stable if you think about it. A coin that is backed by debt and more coins and more debt and more coins. And it's a shell game on the front end for a while. But if we have the ability to drop rates down to zero because of redeemability in gold and bring it back, you have a fighting chance to grow your way out of this problem. You truly do. Inflation will not be solved by letting rates go higher. You'll destroy the system. Inflation would only be resolved in this environment by growing your way out. And we ain't going to do that until we bring back our manufacturing. And we ain't going to bring back manufacturing at 5, 6, 7, 8, 9% interest rates. At zero and a very devalued dollar, yeah, you could. Honest to God, I believe that's what the plan is. So yeah, you save in dollars, you're destined to go broke. You're not a contrarian, you're going to be a victim. And that I do believe. 100%. We've become net importers of gold since November. And, there's no coincidence that's when he won the election. The amount of interest that we've seen on all levels, precious metals, since November, and the crumbs that have been left along the way from people such as Donald Trump himself, Treasury Secretary Bessent, Judy Shelton. I mean, on Easter Sunday, Trump says by tweet, he who has the gold makes the rules, the golden art of negotiating. That comes after massive imports since November. In 35 years, I've never seen that, ever, never. Maybe 1 month here, 1 month there, but now month over month, we're seeing massive inflows into the COMEX. We're seeing the draining of the exchanges on the LBMA and the COMEX. And then you're seeing all sorts of rhetoric that would lead one to believe that things are different this time. And but the interesting thing about it, when you take a step back and you look at the macro picture, Steve, what you see is something that I think really screams to the contrarian in me. And that is that since the beginning of the year, we've seen massive selling in equities by the insiders, the institutionals, the insiders. We just saw Jeff Bezos sell another 5.7 billion in Amazon stock. You got Warren Buffett sitting on 500 billion in cash and treasuries. You have Jamie Dimon selling. You have Zuckerberg selling. You have all of the insider selling. Since June, the institutionals have been selling on average 2 billion per week. You had the top 3 largest shareholders and board members of NVIDIA dumping hundreds of millions worth of stock. Now, this is at a time when the insiders are all leaving and the retail public, the mom and pop, have a larger